Hello, welcome to Austin Star Money, Business, and You. I'm your host, Mike Stein. Today I'm privileged to bring to you our first guest. I've got MarkHairston. He is with Mortgage IQ, and he's here to tell us all about credit scoring. Mark?
Thanks, Mike, for having me today. Appreciate it.
My pleasure.
Yes, I've been in the mortgage business for about 25 years now, and what a lot of folks don't realize is how important their credit score is in order to qualify for a mortgage. So I wanted to kind of go over the highlights around that. What people need to recognize as far as mortgage financing is the type of credit score we use is called a FICO score, F-I-C-O. It's called Fair Isaac score, and it ranges from 300 to 850. And there's 5 primary parts of the credit model here with the FICO system. The first one is how you make your payments. So your pay history is the most important thing around maximizing your score, number one. It's 35% of the score. Number 2, and right behind that, is how much debt somebody would carry. So the more debt you have, the more it's going to affect your score, particularly around credit cards and things like that. So 30% of your score has to do with how much debt you would have. The third thing that comes to mind is any kind of inquiries. So when you proactively go out and apply for credit, you'll have what they call an inquiry on your report, and that's also going to hurt your score a little bit, so affect it negatively. The fourth thing is how long you've had credit. So typically people, to maximize their score, will have had credit over the years quite a while. It's 10% of the score. And then finally, the system, the fifth thing they're going to look at, 10% of your score, also has to do with the types of credit. The system likes to see that you have installment type loans like cars or mortgages, student loans, things like that, along with a combination of revolving credit like retail cards, gas cards, visas, things like that. So in order to maximize your score, you really want to focus on pay history, number one, have a good balance of types of credit, okay? The longer credit you have is the better you're going to be. Reduce the amount of inquiries. Don't go out and shop a lot for different credit cards all at one time, because it's going to hit you pretty hard. And then finally, the types of credit that you use.
Oh, wow.
Okay, so that's sort of an overview of the credit model as lenders go. And we, again, use a FICO score. There's different models out there, but if you are looking to apply for a mortgage loan, you really want to focus on the FICO score.
On the FICO. Well, excellent, excellent. Well, these have all been excellent tips there, and appreciate you taking the time to go ahead and tell our audience all about it. Your years of experience in the mortgage business has really been a valuable exercise for our clients to learn about and our audience to know about. So thank you for taking the time to go over this.
Thanks for having me. Appreciate it.
My pleasure. Well, this has been Austin Star, Money, Business, and You. I'm your host, Mike Stein. And Austin Star, Money, Business, and You has been brought to you by Austin Star Insurance. It can be reached at www.austinstarinsurance.com. I can be reached at Mike at Austin Star Insurance. And any questions for me or for our guests can be reached at 512-923-1273.